All right, today we're going to talk about a pretty big shift, a completely different way to think about investing. We're going to move past just, watching a number go up on a screen. Instead, we're diving into a new way of thinking, one that's all about turning your assets into little machines that actually produce income. Let's get into how you can get paid from your investments without ever having to sell them.
Yeah, we've all heard this a million times, right? It's like the golden rule of investing. You buy Apple stock at, say, $300, you cross your fingers and you really hope, you can sell it later for $600. That is the classic path to building net worth. And hey, there's nothing wrong with it. When it works great. Your net worth climbs and you're richer than you were before. But what if it doesn't?
And see, that's the real catch with the buy low, sell high game. You only get that profit, you only get actual cash in your hand when you hit the sell button. That means you are completely at the mercy of the market. You're just hoping it goes up, and you're hoping you're smart enough to sell at the perfect time. It's really just a waiting game. But what if there was another way, a way to get paid from your assets while you own them, no matter what the market is doing that day?
Okay, so here's how we're going to break this all down. First, we'll talk about the traditional net worth game. Then, and this is a big one, we'll get into a game-changing idea, renting out your stock portfolio. After that, we'll open up the cash flow toolkit to look at the exact strategies. We're also going to explore how you can make time your best friend in all of this. Then we'll put it all together in a system called the wealth wheel. And finally, we're going to ask ourselves, what is a true asset anyway?
All right, first up, the net worth game. This is probably what you're most familiar with. It's the path most of us are taught. It's all about accumulation, just getting more stuff. The main goal is to make the total value of everything you own, your stocks, your 401k, your house, go up over time. Simple idea, right? And it can be powerful. But it definitely comes with its own set of rules and risks.
So this slide really gets to the heart of it. It's about two totally different mindsets. The net worth investor wakes up in the morning, grabs their phone and asks, what's my portfolio worth today, right? Their whole mood can be dictated by that number. But the cash flow investor, they ask a completely different question. They ask, how much did my portfolio pay me this month? The goal isn't just to have a bigger pile of stuff, it's to have that pile of stuff send you a regular paycheck.
And that leads us straight to the biggest risk of only playing the net worth game. Look, it can be awesome, but you are totally exposed to the whims of the market. If the market tanks, guess what? Your net worth tanks right along with it. Your entire strategy really boils down to hoping the value goes up and that you're lucky enough to sell before it goes back down.
Okay, so how do we get out of that cycle? This next idea is what you might call the big aha moment. Seriously, this could completely reframe how you look at every single stock you own. We're going to stop thinking of stocks as just these little tickers on a screen and start thinking about them like they're a piece of property.
This is such a great analogy. Just think about it. Imagine you own a rental house. Now, the Zillow estimate for that house might bounce up and down every month, right? But does that really change your income? Not really. As long as you've got a good tenant paying you rent every month, you've got positive cash flow. Now, what if you applied that exact same thinking to owning 100 shares of a stock? The price is going to go up and down every single day, but just like a landlord, you can collect rent from it. This rent comes in the form of dividends and something we'll talk about called option premiums. All of a sudden, you stop caring so much about the daily price swings and start focusing on the income it generates for you.
And look, this isn't just some nice theory. This is real-world stuff. This quote shows it in action. In one case, a real estate investor pulled in $6,000 in rent from a house even while its market value was actually dropping. And in another case, an investor made $9,000 from their stock portfolio during a time when the stock's price actually went down. So the point is, you can have positive cash flow even when the value of your asset is temporarily in the red. That's a huge deal.
Okay, so if we can collect rent on stocks, how do we actually do it? Well, that brings us to our toolkit. You see, the net worth investor pretty much has one tool in their box, the sell button. But the cash flow investor, they have a whole bunch of cool instruments to work with.
So inside this toolkit, we've got three main tools we can use to generate that income. First, collecting dividends. Then, selling something called covered calls. And finally, selling cash-covered puts. Now, don't let the names scare you. We're going to open up this box and look at each one, and I promise it's simpler than it sounds. Let's start with the easy one.
The simplest tool by far is the dividend. This is just the company literally sending you a check or a direct deposit as a thank you for being a part owner. Think about a big, stable company like Procter & Gamble. Their stock price might wiggle around day to day, but if they keep paying that dividend, you are still getting that consistent cash flow. That's your rent check, showing up in your account like clockwork.
All right, now for the other two tools. They both involve something called options, which I know can sound really complicated and scary. But let's just boil it down. For our purposes, just think of options as selling little financial promises to other people in the market. And the key here is that we aren't buying these promises, we are selling them, and we get paid cash up front for doing it.
So, let's walk through an example of a covered call to make this real. It's actually pretty straightforward. Step 1. You already own at least 100 shares of a stock. Let's say it's trading at $50 a share. Step 2. You sell a promise to someone else, and in that promise, you agree to sell them your shares for maybe $55 a share anytime in the next 30 days. And then step 3, just for making that promise, you get paid instant cash. It's called a premium, and you get to keep that cash no matter what happens. It's yours. It's like someone paying you rent on stocks you already own.
And are we talking about real money here? Well, using an example from our source material, for a promise just like the one we talked about, you could collect $500. Think about that. That's $500 of pure income that you generated from an asset you were just holding anyway. You didn't have to wait for the price to go up. You basically created your own payday.
Now, this whole idea of selling promises leads to one of the most powerful forces in this type of investing, and it's something most people completely miss. See, most investors think of time as something they just have to suffer through while they wait for their stocks to go up. But for a cash flow investor who sells options, time actually becomes your greatest ally. It works for you.
The whole concept is called time decay. So remember that financial promise you sold? Well, it has an expiration date. Just think of it like an event ticket. As you get closer and closer to the concert date, the ticket is worth something. But the second the concert is over, that ticket is worthless. It's just a piece of paper. Since you were the one who sold the promise, that daily decay in its value, that's a direct profit for you. The clock is literally ticking money into your pocket.
As the source puts it, I like making my money on time decay. I mean, think about it. Trying to guess if a stock is going to go up or down is, well, it's a guess. It's unpredictable. But time decay? That's a constant. The sun's going to rise tomorrow, and those little promises you sold are going to be worth a little bit less. Time becomes your most reliable employee, working for you 24/7.
Okay, so we've got our tools. We have dividends, we have selling calls, and we have selling puts. So how do we put them all together? How do we build a system that can generate income month after month like a machine? Well, this is where we build what's known as the wealth wheel.
Let's walk through this because it's a really powerful cycle. You can start at step 1 by selling a put. That means you get paid cash today for promising to buy a stock you already wanted anyway. You're just agreeing to buy it at a lower price. If the stock drops to that price, great. You just bought a stock you wanted on sale. If it doesn't, you just keep the cash. Either way, you win. So now you're at step 2. You own the stock. Immediately, you can start on step 3, collecting any dividends it pays. Then, for step 4, you generate more income by selling a covered call on those shares, getting paid to promise to sell it at a higher price. No matter what happens, you've been paid at every single stage. And then, the best part, step 5. You just repeat the process, over and over again.
You see what this does? It completely changes the game. Investing is no longer this passive buy and hope activity. It becomes an active, income-generating business. You're not just a passenger anymore, hoping the driver takes you to the right destination. You're in the driver's seat. You're the operator, actively managing your assets to produce a paycheck. And all of this, it brings us to our final and maybe the most important question of all. When you start thinking this way, you have to ask yourself, what even is an asset? The answer might just change how you look at everything you own.
The definition is just so simple and so powerful. A true asset is anything that puts money in your pocket, period. And a liability? That's anything that takes money out of your pocket. It's not about what something is worth on paper, it's about what it does for you. A stock that pays you a dividend is an asset. A rental property that pays you rent, that's an asset. A stock that just sits there doing nothing, you could argue it's not really behaving like a true asset at all. So let's leave it with this final question for you to think about. Take a look at your own financial life.
Are your investments just sitting there, quietly, hopefully building your net worth for someday way off in the future? Or are they working for you right now, putting cash in your pocket and helping you pay the bills today? The answer to that question could be the key to a whole new level of financial freedom.